Hello, hello everyone. This is Artem. I'm Chair and CEO of ACG Metals. We are pleased to present to you a massive operational improvement that we have developed at Gediktepe mine in Turkey. Just to remind you, Gediktepe is a producing mine on the western side of Turkey. It's a polymetallic deposit with a very high grade, 2.3% copper equivalent. We are currently producing gold and silver from the oxide cap of the deposit. The guidance for this year is 36 to 38,000 ounces. And the free cash flow we expect will be around 75 million US on consensus pricing. We are halfway through building a sulfide expansion project, which is a flotation plant to process ore from the sulfide part of the deposit that will enable us to produce up to 25,000 tons of copper equivalent per year and reach $100 million free cash flow on consensus pricing, which is about 25% below current spot. Since we acquired the asset in September of last year, we work hard to improve the operations, including improvements on the cost structure, which is a good achievement in a high inflation country such as Turkey. And we are halfway, as I mentioned, through building a sulfide expansion project. We plan to reach commercial production by the end of June next year. And that, as I said, will get us about 25,000 tons of copper equivalent production annualized in the form of copper concentrate and zinc concentrate. We have worked very hard over this year to find the technical solution to process the third type of ore that we have at Gediktepe. So on top, we have oxide, from which we currently produce gold and silver through a simple heap leach process. That oxide ore will be exhausted by the end of the year as per our current mine plan. We will start producing copper and zinc concentrates from the sulfide part of the deposit, which is the main ore body. And they will plan to start producing that in the middle of next year. In the meantime, what we have in the middle is so-called enriched ore, which is neither oxide nor sulfide. In the current mining plan, it's treated as waste and stockpiled on our site. We have to dig it out in order to reach the sulfide, but it's a high-grade waste. So we have worked hard to develop the simple technical solution to process this high-grade waste. And we are very pleased to present today the results of the scoping study level study to demonstrate what we can do with this waste. So with a small investment of $29 million upfront and additional investment of about $10 million in 2 years' time, we shall be able to unlock over $300 million in free cash flow and add $200 million NAV to ACG asset base. The project has very high IRRs. This is simply the result of the fact that we are processing waste, which is stored on our site. So we do not incur any mining costs. We only incur processing costs, which are very small in a SART plant that is about $15 per ton. So the financial results are outstanding, to say the least. I would also note that we have significant contingencies in this number as per the scoping study level economics. So we have 25% contingency in CAPEX. We have 15% contingency in OPEX. And as I mentioned, the commodity price used in this study, 25% roughly below current spot prices. They are on consensus basis. Patrick, maybe over to you to take this further.
Thank you, Artem. Yeah, Artem mentioned the economics already in a bit more detail, but I think what's really interesting in this project as well is that we are also reducing our environmental footprint. So this project is actually treating a stockpile that's potentially acid generating. We are putting it in a plant, getting significant economics out of this and reducing our environmental footprint on site, which is obviously a very important aspect of the improvements that we've been doing over the past years. Safety-wise, the mine is running at 0 LTI since inception, and we are also working on actually improving the environmental footprint. This is a major project for this. Next to that, we are also improving our technical footprint, because if we have oxide coming out of the pit, we have a heap leach to treat that. We have the sulfide. That's why we're building the sulfide flotation plant in the south. With the SART technology, we can also treat any ore in between. Some sulfide that has been oxidized a bit, some oxide that's a bit more true sulfide characteristics. You put it in the SART, you always have a technical solution to get the best economics and recoveries out of the ore body. And the third aspect that we don't mention here, but also financially, it obviously improves our financial profile. You've seen the significant cash flows it adds. That's during the life of our bond. So it will enable us to either refinance cheaper or actually repay in the end of the bond life much more easily. If we look at the integration, it's a simple integration. We're doing it in 2 stages in order to simplify it even further. The first part of the project will be focusing on the precious metals. The second part of it will be then also adding the base metals, and that's kind of building a track record, showing it works, and then moving into getting the maximum value out of the enriched ore zone. If we look at the next page, we see on the site where we are building this plant. So on the upper left side, you see the stockpile that's been piled up over the last 2 years. It's been more oxidized, so hence the precious metal aspects of it are more economic than the base. That's what we're treating first. With the second phase on the bottom left picture, you see that's still in the pit, but it's already in the economics of the sulfide plan and the mine plan for that. So again, no additional mining cost for getting this material out for the SART plant. And on the map location, you see the SART plant is literally next door to the stockpile, means within 100, 200, 300 meters, we actually can put the ore into the plant, treat it, hence the economics are so interesting and adding a lot of value to our project. If we go to the next page, we're looking a bit at the flow sheet here. So the stockpile is already there. We're getting a normal crushing grinding unit similar to what we have on the oxide and on the sulfide. And then there is a oxide kind of aspect, which means there is a leaching aspect to this process. Then there is a sulfide aspect, which is the sulfidization. And then the final magic is kind of the pH adjustment, which separates then the metals from the rest. And the thickening gets us then to basically the normal process that we have already there. The Merrill-Crowe plant is operating since 2.5 years now. The waste dumps are there. The tailing storage facility is being built with the sulfide. So all of the infrastructure is there. And then we are producing in the first 2 years gold and silver doré. After the first 2 years, we are basically adjusting the chemical mix. We are adjusting the pH adjustment, and we're adding another tank, hence a 10 million more investment in 2 years. And that's why we are then able to produce not only gold and silver through the oxide flow sheet, we will also be adding additional copper and zinc concentrate through the flotation sulfide flow sheet. On the next page, we just want to show you that this is not a technology that's kind of a pilot plant or something new. It's a technology that's been used globally with different mines and really big companies to smaller companies. And it's a proven technology for roughly 20 years. There's other projects in the world, but those examples you see here have a similar ore type structure. And most importantly, you see the lowest is Koza Holdings, Mastra in Turkey, just around the corner, proven technology for 15 years. We can use the same engineering company we can use exchange ideas about the technology and the chemical mixes. So a very good precedent for us in country. On the economic side, I think Artem already mentioned it. The key aspect on this slide maybe is that given the small capex up front and the good cash flow generation because of the good grade and the low cost of processing it, you can sensitize this project further. You add another 20% commodity price sensitivity, you add a higher discount rate, you add a cost sensitivity. It's a very, very robust project. And that's what gives us a lot of comfort to proceed with this. It's a low-hanging fruit. It's on our side, on our license. We basically can access this very quickly, and it's a very robust project. So hence we are really, really happy to present this to the market.
I think what's important, we have mentioned to you the staggering economics, but essentially it does add close to 60% NAV to our asset base. That's a very happy organic development and showcases the technical capabilities of our team and follows very much the business model that ACG employs. Find a good asset, do a good transaction, invest and improve. We are at the invest and improve stage and pleased to report such a nice and value creative solution. We are aiming to start producing from the SART plant by the end of next year, when the oxide production is supposed to end according to the current mine plan. And that's exactly the solution that we've been telling the market we will come up with, how to continue have two revenue streams from the Gediktepe asset. So at the moment we have gold and silver production from oxide. From the middle of next year, we'll start on the production of copper concentrate and zinc concentrate from the sulfide part of the deposit. Oxide will end at the end of next year, and by that time we should be in a position to start producing from the SART plant, so to continue on the two revenue stream, diversifying our cash flows and significantly increasing them. Thank you very much. Let us know if you have any questions. Mandy, please read any questions that come in.
Yes, we've had a couple of questions that have come in. The first one is, how will the SART plant integrate with existing infrastructure? And are there any bottlenecks or dependencies that could impact timelines?
Patrick, please.
Yeah, it's a good question. So as we said, the upfront part, the mining is already done or costed in the other projects. Then you have basically the addition of that simple plant that we are building. And then there is the Merrill-Crowe that kind of produces the gold and silver in the first phase, and the existing flotation sheet at the time for the copper and zinc in the later years. The Merrill-Crowe plant can actually be fed from the heap leach and from this plant in parallel. We have no bottleneck in the Merrill-Crowe in the ponds that we have for the liquid solution. And obviously, after we pour the gold bars, gold and silver bars, it gets through a secure transport to Istanbul refinery. That's been established for 3 years now, so nothing changes there. So if we look then at the flotation side of things, after the first 2 years, we're going to add the copper and the zinc. It's not much volume. It's basically been able to also be handled in the flow sheet there. And then also the logistics for this will be established for more than 3 years at the time. So no bottleneck on this side either.
Thanks, Patrick. Second question. The project reprocesses material previously considered as waste. How is that being positioned from an ESG standpoint?
Artem, you want me?
Yeah, please go ahead.
Yeah, from an ESG point of view, it's as I said, the stockpile in the fully permitted sulfide expansion that we have was classified as potentially acid generating, which means it can or it cannot. It may or it may not. But ultimately, by taking that stockpile away from the site and treating it economically, we're reducing our environmental footprint, hence improving our ESG picture for this asset. It was classified as waste, but people knew that there was a lot of material in this stockpile, right? So that's why there's been a lot of work going in this from the previous owner. And obviously, as Artem mentioned, we spent about the last year since acquisition to find the best route, how to treat this, how to actually improve our environmental footprint, but also improve our economics, right? And that's how we came up with this solution now, a year later after the acquisition.
Thank you. And one final question. With the IRR of 185% and a capex ratio, NPV to development capex ratio of 5.4 times, what are the key drivers behind this strong economics? You've already touched upon this earlier, but it would be good to get more insight.
Yeah, it's very simple. We're processing waste. It's already been mined out. There is no mining costs. The processing costs are very low at about $15 per ton. And the waste that we have is a high grade, so we extract a lot of material, gold and silver in the first 2 years, and then we add copper and zinc. And that's what drives the economics, which is all the calculations, as I mentioned, are done on consensus pricing, which is 25% below current spot. So that economics could still be improved.
Thank you, Artem. We've just had another question come in. Any updates on extending life of oxide plant?
So we have been telling the market that we're looking for ways to extend the cash flows from continuous production of gold and silver. That's exactly what the SART project does, but it will feed directly into the Merrill Crowe bypassing heap leach. You don't need a heap leach for this operation. So essentially what it means that potentially we could add further revenue by processing other people oxide ore in our heap leach. Our own oxide ore will be exhausted by the end of the next year as per current mine plan, as we always said. We will have additional revenues coming in from the SART, from continuous sales of gold and silver once the oxide is out. But we're also in discussions with several parties nearby in regards to possible buying the oxide or doing a toll treatment. So we'll update the market accordingly.
Thank you, Artem. Another question regarding the oxide plant. Is the existing oxide plant going to be involved in the processing of the transitional ore, or is all the plant for the transitional ore going to be completely new? If it's all new, is there a scope for also continuing to use the oxide plant if you can find the ore to feed it?
I think I have answered the last part of this question already. Yes, if we find additional oxide ore, we can put it on a heap leach, and then it goes into Merrill Crowe plant together with output from the SART plant that will not interact with one another. So that would enable us to increase the gold and silver production. Patrick, you want to mention talk about the flow sheet again?
No, I think we touched base on it, but literally, as Artem said, you're bypassing the heap leach, but you're using the Merrill Crowe. The Merrill Crowe feeds into the pouring of the doré bars that gets transported to Istanbul. So hence, you basically utilize the Merrill Crowe from the oxide flow sheet, but that's the only bit really. And as Artem said, we can feed another oxide into the heap leach, have it in parallel with the SART, both go into the Merrill Crowe, which has no capacity shortage, and then basically produce gold and silver. So.
Thank you. And that's all the questions so far.
Thank you very much, everyone, for your interest in ACG and our operating improvements. It's been a pleasure. Thank you very much.
Thank you.